All right, I've welcome back for the episode of This Weekend Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week here. So markets really kind of sideways, although they did finish the week positive. So you can see we closed there Friday at 436.50, and we talked about getting a bounce last week, and we did get that. So markets were a little beaten up, a little oversold, going into a decent demand zone, right? So there's some support in this area, and we got a bounce there. Where did we get the bounce to? Well, I suggested we could get it up to that 50 moving average and 20 moving average. And that's exactly where we went on Thursday. Markets gapping up on the Nvidia news. So Nvidia having a blowout quarter, which we'll talk about in a second when we cover the semis. But we did come back in. And then, of course, Jackson Hole on Friday. And basically, Powell did not really say anything too new. We did dip down in the morning, and then we came back by the end of the day. So markets here, they're hanging in there. We did put in a slight higher low, and again, like we said, we got a bounce that was expected. Now we'll see. Are we setting up? If we get rid of these lines, are we setting up possibly? And again, it's premature, but are we setting up a possible bear pattern here? So if we go here and we just kind of duplicate that. You can see you could be setting up some sort of bear pattern there, possibly sideways to up for the next week or so. And then again, as we get into kind of the fall, September, really it's the worst month for the market. You could see another drop here. So again, that's something to watch for. The first leg of the bear is usually the weakest one, and then you get a bounce, and then usually you get kind of a bigger move down, which could take you down to the fall. Your first big level of support is around 420 there on the spiders. So you can see right there. That's where we broke out of, so that should be big support. There's also the 100-week moving average, obviously, which is flattened out in that vicinity as well. And then if we look at a monthly, there's your 20-month moving average right around 413, just below that, which is actually trending down just a little bit there. But either way, right now, markets got the bounce we were looking for. Powell did not really give much indication as far as direction here. Again, just kind of said data dependent, although still very open to hiking rates. And obviously we'll cover interest rates here in a minute. But right now, from what I can see, it does look like we'll at least be sideways to up. For bulls, you want to see, we'll put our lines back on here. Bulls, you want to see a weekly close above 450. You need to get back above this trend line, and you need to get back above, on a weekly basis, this red bar here, and kind of like this pivot right there. So that's kind of where bulls really need to go to reclaim dominance right now, but still bears in control. We went up into the area we talked about last week, and we got a rejection off of that, and that is despite the Nvidia earnings here. Obviously Nvidia hitting a new all-time high, gapping up. It actually got up to about 520 after hours yesterday, and then we gapped up to 500 and came back in pretty sharply. So a little bit of a sell the news there. By the way, little bit of creative accounting going on potentially. So Nvidia, the big thing there was that they beat their data center estimates. Basically doubled their previous revenue there. CoreWeave being backed by Nvidia, they bought, and this is how much they beat by, right? 2.3 billion. So buying 2.3 billion in Nvidia chips with a loan from, and it wasn't BlackRock, it was actually Blackstone. But then they used those chips as collateral, BlackRock owning the 182 million shares of Nvidia, and Nvidia claiming that they beat their revenue, data center revenue, by 2.3 billion. So a little bit of creative accounting going on. And then obviously we saw a pretty good fade. We talked about this last week, insiders selling the stock. To me, I saw lots of distribution. Take a look at the volume there. Yes, we did close green on Thursday, but 115 million shares, heavy distribution volume at the high. So looks like some unloading into retail there as the stock was upgraded a million times. But in any case, this has become, again, and I said this last year, or I should say 2020 and 2021, I said this about Tesla, but this could be a tumor here on the market. So and what I mean by that is, if the best is priced in and this starts to come down, it's a double-sided sword. It's great for the market when this is running up, but if it comes down, it's going to drag the whole market with it. But in any case, finishing down 2.43% here on the on the day Friday, and then we did come in well off those highs. By the way, weekly close below the previous all-time high too, so a little bit of a red flag there. But in any case, QQQ here, again, got a bounce like the spiders on Friday. Same thing, went right into that 50 and 20, came back in pretty sharply. Again, you can make a case this is setting up that same kind of bear pattern here. We go neutral to upside, we could have one more shoot down. And then, of course, there is support here at this trend line and the 100-week moving average. So again, I think you would need to build a little bit of a base to get through that, which does support the notion that we would be a little bit sideways to up as we cut into the end of the month there. Russell 2000 here on the week. Again, weak bounce. So, we had the bounce Friday, and then we've just been sideways. So again, down move, and what kind of pattern? Sideways, that's a bear flag there. So again, Russell here, showing some weakness. Definitely don't want to lose these pivots here around that 181, 182 area. If we do, there's not a lot of real estate all the way down to this gap around 175. And again, the Russell never really recovered last year, or this year, I should say, from the bear, right? We're just down and you're just inside of this range. That could be, you can make a case that that's just a big monthly bear flag there on the IWM. So just keep that in the back of your mind moving forward. Dow here also backing off again, similar kind of pattern, down move, inside bar, bear flag. We broke down a little bit on Thursday. On Friday, we were able to pop up and hold that 100 period moving average. And to be fair, we did close back above 343, which is that little trend line there. So a decent little showing there for the Dow. But again, this could still go sideways here and set up a bear base for another leg lower. So just keep that in mind. Semiconductors here up 27 cents on Friday after the sell yesterday. Again, gapping up with Nvidia. Again, this gaps the whole sector up essentially. We filled that gap from the 7th and came down pretty sharply on Thursday, and then Friday here just kind of holding this area. If this pivot goes, again, there's that trend line there, but if we put a big enough base, it can get through that. But if this pivot goes, especially on like a weekly close, you probably headed down to this gap here, which was, again, the Nvidia gap, which also kind of coincides with that 200, right? So 200-day moving average, weekly, 50 and 100 there. But there's a big air pocket here on the semis, so be aware of that. Then again, Nvidia is tied to a lot of things right now, so that stock is, it is the market in many ways. Cloud software actually had a decent recovery on Friday. Intuit reported earnings, and that stock got upgraded nicely, so that was up 4% there, which kind of helped pair some of the losses from Thursday. Again, IGV gapping up on Thursday with everything else, and then finishing with an engulfing reversal. We got up to that trend line that we talked about last week. We came back in and then got a bounce on Friday. I still don't like how last week we closed below that green bar low, so that's a sign of weakness there for cloud software. But again, just kind of backing into this trend line here, and we'll see how that trades over the next couple of days to weeks. Dow Transports, again, another pattern here. This is a down move and a bear flag, right? So we talked about the bounce on last Friday. We got it, and then this is all it's done. So 1, 2, 3, 4, 5 days sideways the entire week. 6 days if you include Friday. So again, this could be setting up. We just get rid of these lines. You can make a case. It's just setting up a bear flag look. So again, watch that. This 20 moving average catches up to price, and we're still in this range. This can have another leg down into that 15,000 handle. So watch that for the transports there. Definitely not a good sign when you see those lagging. All right, flipping over here to interest rates. So we'll start with the 2-year as always. So the 2-year yield here continue to inch up this week, and that is a new closing high. I believe a 16-year closing high. So the high in March was 5.076. And we are at 5.08 right now. So that's a new closing high there for the 2-year yield. 5.33, that's the big level to watch. We get through that, that's where the market can really start to panic, because the whole notion is that the Fed's done hiking, inflation is defeated. If this gets above the Fed funds rate, the Fed is now behind the curve, and they can say data dependent all they want, but the market will be telling them that they have to hike. So watch that 2-year. Everybody's so focused on the 10-year, and it's important, but this is the one that really, this is the one that dictates Fed policy. But in any case, 5-year holding up well. You can make a case you've got a kind of cup and handle type look there on the 5s. 10s in a double top and backing off a little bit, still holding the 20 moving average, and then the 30-year. into double top and holding the 20 moving average. This one is the weakest, so the long end of the yield curve starting to come down a little bit. That's kind of what the Fed wants. They want those rates to kind of come back in. And although the 2s and 10s did come right back down this week, 3-month and 10-year starting to back off a little bit, but starting to trend in the right direction. But again, that long bond still under some pressure here, or I should say the long yield still under pressure, correction there, but still holding the 20 moving average for now, and still in an uptrend. Okay, anyways, over to housing here. So XHB finally cracking last week, as we talked about. Got a little bounce Friday. We back tested this 80 handle. So that previous pivot there got back tested, and then we came back down towards the end of the week and finished a little bit off the lows, to be fair. Again, if this continues sideways here, it's going to build a bear base. So watch that. If that breaks, set it down to 74. Same thing there with the ITB. Again, holding that 100 moving average right now. But if you set up a bear base, it's down to 77.50 and then 77. REITs here for the VNQ. Actually having a decent week. This actually bounced more than a lot of things. We talked about this little trend line, and, to be fair, we pretty much held it. So that's holding up okay. That can still get to 84. You'll have some headwinds at 83, but that's kind of your max move right now. If you get through this and have another leg lower, I don't see it getting much through 78 currently. That actually might be an attractive level for a quick swing there on the VNQ. Another week chart, XLF. So again, last week, talked to you about this. We broke below that green bar and closed below it. Sign of weakness. Again, down move, bear flag, right? So that's starting to set up another bear base there. So Fins unable to really get anything going. KRE, we talked to you guys about this last week. We closed below 44.50. So that's a weakness. That's a failed inverse head and shoulders there on the KRE. Not a good look. KBE looks like it hung on by the skin of its teeth here, but still came back in very sharply, and just not a good look there, giving back that entire breakout on the large banks. So Fins also a weaker sector, just like a lot of other things right now, so be careful of that. Broker dealers finishing right at 500. This can still go higher, and again, these guys benefit from volatility, but right now still in an uptrend. Still has to get through 500. If you get through that, you can go to 510. If we start to head lower, it's down to 470. Okay, anyways, let's flip gears here and go over to commodities. So starting off with crude, as always. Crude's still holding up really well. We did get rig count, I believe, today, and down another 10 on. Sorry, oil rigs were down 8, gas rigs were down 5. And again, big picture, crude is just still hanging in this range, right? So I think it's still just doing weekly consolidation. We went into this pivot, right? And said that would be resistance. We would need to pull back and base, which is what we're doing. So I don't see any issues here with crude. Even if it gets down, I don't see it going much through 74 right now. But weekly consolidation here can get you a squeeze. You get a weekly close above this pivot right here. It's going up into the low 90s. So crude holding up really well. I don't see any problems. XLE, same thing, looks really good. Did back off a little bit this week, but nothing more than weekly consolidation. Same thing with XOP and OIH. These things are just basing here for another push up. Nat Gas here. Interesting inventory number today. Yesterday came out plus 18. Market was expecting like almost 30. So that was a really big miss. It was very mispriced. And Nat Gas got a nice bid off this trend line as a result, and nice little push or continuation push today. So again, testing that little pivot from last month, or say earlier this month, and into this trend line. We'll see if that can get going. Needs to get above 267. Above 267, you go to 280 to 285. Above that, it's back up to 3. Again, also rig count down there as well, coming into kind of a positive season as well. So we'll see if that can finally get some traction going. Into uranium, CCJ having a decent week again, up Monday, little pullback, 3-day pullback, and a continued pop. URNM acting well as well. Looking on the weekly, again, still no problems here. Nice continuation. Been saying that this is a good pattern ever since we got back above this red bar in a weekly close. Remember that? So we did that. We pulled back, we consolidated, and now it's pushing up. You will have some resistance with this pivot around 39 to 40. So just be aware of that, but it's acting well, and I don't see any real problems here. Take a look at CCJ. This is the big level. I drew that in for you guys. And I'm gonna have to go to a daily, but we're gonna have to zoom way out because this goes all the way back to here, 2011. So this was the big uranium boom here, right? And we had that big breakdown. I believe this was Fukushima, if I'm not mistaken. But there's your gap fill. And if we zoom all the way out and go all the way back, that's where it is. So that's going to be, and we'll just use a monthly here. There you go. So that's where it is. That's where it probably wants to get in the near term. So that will be resistance, but nice move there for CCJ. Great pattern, great consolidation, and a big pump. Looks fine. So no real problems there. Ag hanging in there okay. We talked about this. This pattern improved a lot today on Friday here. So up move, little pullback, and then it got a nice pop on Friday. DBC hanging in there okay. Those of you who follow the DBA, that got a decent bid also back above the 50 and 20. Mosaic, Intrepid, and NTR still just doing backing and filling here. Don't really see any issues there currently. Okay, let's get over here to the dollar index. And we'll pull up our dollar chart. So the dollar index here, there we go. That broke out. So again, so here's your first, the yellow trend line there. I don't even care about that as much as I care about this weekly red bar. So if you'll remember a few months back, I said as soon as we close below via this red bar here, below that green bar, I said look, neutral to bear on the dollar. We went bearish, and then I said if we close back above this red bar, it's bullish, and we went bullish. And I've been saying for the last 2 weeks, if we close above this bar, it's bullish, and now it's above that red bar. We should have some resistance though, 50-week moving average, and then that pivot high 104.70. It's a little overbought here too, 6 weeks up in a row, but this is a failure. So we just negated 2 breakdown bars on the dollar index. And I mean, look at that. If we look at a monthly, look what happened here. There's your green bar. We tested it. We tried to break below and we got back above it. So dollar index could squeeze. That doesn't mean, it's a little overbought here short term, but this can squeeze up into the 106 handle in the next couple of weeks if we do some more basing. So dollar could be, the wrecking ball could be back on here. That's another reason why I'm careful with these charts here, careful with those spiders daily. If they're setting up bear flags and the dollar's starting to break out, that is a huge negative for markets, as you can, I'm sure, imagine. But anyways, over to gold here. That did get a little bit of a bounce here. It's still kind of quiet. Gold market's been a little bit on the softer side and the quiet side. Holding the 200-day moving average. If this flags a little bit, again, I could see it up to 1975, 1980, maybe 2000. If you get through that, then you can go to 2050. If we start to head lower, still 1830 to 1850. Nothing has changed there. Silver, on the other hand, is getting a nice bid. So that had a nice pop on Wednesday. Stalled out at 2450. That is resistance right now. If this flags here, we'll say 25 and a quarter. We'll say that 25 and a quarter for right now. We'll call that resistance. If we do start to roll back over, it's down to 21, which is a buy. Outside of that, though, it looks okay. I just would have preferred not to close below that weekly green bar there, but we recaptured the 20 moving average on the weekly, and the monthly, not a terrible pattern there. So that looks okay right now. Definitely keeping an eye on silver here for pattern there, but those are the levels that I'm watching. Platinum getting a nice bid as well. That still has resistance at 960. If you can get through that, then it's back up to 990. I think that has to pull back first though, but I'm ultimately looking for one more down move in platinum. Palladium also sideways there. I think that's setting up for a move towards the 1100 handle. And then copper getting a little bit of a bounce, but stalling at 380, which I told you about last week. If it holds 370, then maybe you can get up to 390 again. Again, this is very choppy, very sloppy. If it heads lower and takes this out, it's going down to 340. So just be aware of that. Lastly, Bitcoin. So flip over one more time here. Bitcoin here, just still kind of languishing, right? So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 10 out of the last 11 days are down. It's getting kind of ridiculous. Like that we only had one green day here in the last 10 or 11 days, but Bottom line is the longer this consolidates sideways, and again, another thing that's bear flagging potentially, the more this consolidates sideways, the more minor this pivot becomes. And if we set up a bear base, this is going down to 21.5. So just be careful of that. It gives off these vibes to me like this right here, where it crashes, gets a big tail, and then just goes sideways, right? So same thing here, crash, sideways to up, down. So very, very similar, very reminiscent pattern there on Bitcoin. But watch this, if we keep going sideways there, it's setting up a base for a move lower. So just be aware of that right now. Okay, anyways, let's wrap up here. So spiders, again, let's watch next week. I think we trade probably sideways to up. Wouldn't even rule out a 450 test. For bulls, you need to see a weekly close above that level. And really subsequently 450, 352. You do that, then we can go to new highs, meaning above 460. But until then, conditions, seasonality, and the like, dollar index, for instance, could be putting pressure on the market. Watch Nvidia. That is the king of the market right now. If that starts to come down, it's going to drag everything with it. But if we start going sideways here, it could be telling you that we're setting up a bear base for a move towards 420. Anyways, guys, I'm going to wrap it up here. You guys have a great weekend. I will talk to you guys all next week. Subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you guys all later.